Let's go with your man VC. Listen, guys, now that you have your indicators, you're waiting for your alerts and stuff like that. There are certain students that are spending more time, getting involved, watching their money, which is great because it takes time. You evolve. So the next thing you want to learn to go with your indicators are patterns, right? So you can Google like the best patterns to follow. The flag pattern, right? The flag pole patterns are probably the best patterns to find. The majority of the wins on them are huge. So these are one patterns that you guys can see. And if you take a look, it's very simple to put flag and pole pattern rules, right? The flag portion of the pattern must run between parallel lines and can either be slanted up, down, or even sideways. Flags that are angled in the same direction as the preceding move, as an example, a pole and flag slanting up degrades the performance of the pattern, right? So you want some type of pullback for it to go up. So these are things that you want to Google. I'm going to put the link inside of, you can just Google this, man. It's very easy. So how to use flag pole pattern. So let's take a look here. Very simple. How a flag pattern works. Flags are a tight consolidation, is a price action showing a counter trend move that follows directly after a sharp directional movement in price, right? The pattern, and these flags can be on the down or to the up. They go both directions. Follows directly by a sharp directional price. The pattern typically consists of between 5 and 20 price bars. Okay, listen to what it's saying. Consists of 5 and 20 price bars. Flag patterns can either upward trending bullish flags or downward trending bearish flags. The bottom of the flag should not exceed the midpoint of the flag pole. So when it's coming down or whatever, going up, whatever, it should never pass the middle of your flag pole. Flag patterns have 5 main characteristics: the preceding trend, the consolidation channel, and the volume pattern. A breakout, a confirmation where the price moves in the same direction as the breakout. A confirmation where price moves in the same direction as the breakout. Bullish and bearish patterns have similar structures but differ in trend direction. Okay? The subtle difference in volume patterns. The bullish volume patterns increase in preceding trend and declines in the consolidation. By contrast, a bearish volume pattern increases first and then trends to hold the level, since bearish trends tend to increase in volume as time progresses. Okay, let's read that again. A bearish volume pattern, increases first and then tends to hold a level, since bearish trends tend to increase volume as time progresses, right? So you're getting more volume, but you're not getting any movement. A flag pattern is basically a parallel marker. So here, a flag pattern example. In this example of a bullish flag pattern, the price action rises during the initial trend move and then declines through the consolidation area. The breakout may not always have a high volume surge, but analysts and traders prefer to see one because it implies that investors and other traders have entered the stock or coin in a new wave of enthusiasm, right? So here you go. Bullish flag example, right? So here's your push up. And this is where you can see where you start doing a trend, right? So here's your push up, and here's your wick up. And then it starts to come down, and it doesn't have a higher high, and then doesn't have another higher high, and then it peaks all of a sudden, and then comes back down again. And now what it's doing is, once you see that peak and it starts to come down, you put that trend line down, right? Take a look at that. Put that trend line down. And then at the bottom here, you go from these candles here and you trend down. Now, this right here is letting you know you're getting into a flag pattern. Volume, right? And take a look here. Bullish volume pattern, right? Selling pattern. Push, big bullish pattern up. It comes down, stays even. It builds, it's red, green, green, green. Big red, right? That's liquidity. Liquidity, down, and then boom. You start to see this pattern move up, and then you're green, green, and then boom. there's your move. Okay, guys. So you want to focus on this pattern, guys. Read up on the bear on the bull flag pattern. Now this is the bearish flag. Now here it's because the move was up, consolidation, and then a breakout. This is a pattern here where you have a move down and then a move up, right? And then boom, a down, right? That's the flag, right? It goes up, higher high, higher low, higher high, and then it breaks the pattern, right? So you're always looking at these candles here, right? Breaks the pattern on that second move, there, and if it breaks that pattern, then you have a downward trend. You look at your volume, right? Here we go again. Liquidity grab, volume, no volume exceeding above the earlier volume. See that? The volume never purged past the current selling volume. Boom, 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 and then all of a sudden staying level and a drop, okay? And this is basically a drop down. We'll put this link in the bio. It's very simple. Entry level through suggest current trend. Stop loss. Traders typically expect to use the opposite end of the flag pattern as a stop loss point. For example, if the upper trend line of the pattern is 55 bucks per share and the lower trend line of the pattern is 51 per share, then some price below 51 per share would be a logical place to set a stop loss order for a long position, okay? But you guys can go read this. I'll put this link in inside the indicators area. This will give you guys something. This is the pattern you wanna go after, because this pattern is going to show up in everything you do. So as we go back and look at some stocks, we're going to take a look at those patterns, and we'll see you'll see a lot of the resemblance in those patterns. And this will give you a chance to, while you're looking at a particular trade or a particular coin, while you're studying your coins, waiting for your trend lines, checking your alerts, because I know you guys, as you start to trade, you become more interested in what your trade is doing, so you want more information. So this basically will allow you to start watching patterns, so that way you know if you're looking for the down or the up, and it gives you a little more ability to prepare yourself, to get yourself set up in a position where you're ready to make a particular trade. Let's check out some products here. Let's check out a chart. All right, so for particular here, and most of the time you want to run a little bit higher. You can run it on anything, but notice right here, as soon as we come out the gate on the 15-minute, what do we have? An explosion, right? Look at this explosion. Here's your flag, a huge explosion. Here's your consolidation, right? So let's go through this and map this out and see what we look like on a flag pattern. So let's open this up, extend it out. We have here's the flag pole, right? Now with the flag pole, we can jump over here. We're going to take our marks. Let's get our flag, and we're going to take our bottom. All right, and let's open this up a little bit here. As we can see here on our indicators, we are green all the way. But just to take a view here, what we want to take a look at is like what you could be thinking here. So the first thing is you want at least 2 candles to be in a situation where you're getting a nice little run across, right? So this looks like this pattern is sitting somewhere in here. You can even pull up to that candle bottom there, those 2 bottoms. And then on your top candles here, we can come across the top and this one right here. And there we go. That's our flag right there. And what we're looking for is basically as it starts to touch, comes back down. Now this is great for you guys to kind of look. Everything always comes back down, guys. So if you miss a run, you're waiting to get in, you see this come back down. This is kind of like our position that we want to be in here. This is kind of like the patterns that we're sitting. And And we're going to blow this up on another time frame as well. But as you can see here, we touch the top, we come down, touch the bottom, we retest, we come back down, we retest, and then we do not come all the way back down, and then we start to go sideways, and then next thing you know, we start to push and we break that pattern, and there we go. There's your push. Now we're in another flag pattern right here after that push. And once again, you guys can take your indicators and stuff that you just learned and get yourself squared up over here to basically take another look. Now this one is looking bullish because it is actually trending up here. So there's your 3 flag right there. Right, so you have these 3 right here. Right there, first 3. 3, 1, 2, 3. There's your flag, and then let's take a look here what we have. And this right here would be this flagpole here. Now, this is showing you a slight move up, and this is where you have to watch, right? So notice right here we have a slight push up. Now this right here is normally you want a bull flag. Okay, let's go down here. All right, so here's a bull flag down here, right? This bull flag down here, right? Look at that. It came down, and it has more of a flat look, or even you want it to aim a little more down, and that would be a bullish trend because it's liquidity, and then it's growing out. Here, it drops down, and what we really have, even if we're taking the bottom of these bottoms here, this is a upward push, right? So this flag is more of a bearish flag, meaning that it's staying on its push up. It's not really consolidating and making, it's not building liquidity. It's not making a good consolidation, which means as we come across, more than likely this is going to be a breakdown here. So, and that's where you can see on your volume breaking down. So this is just a version you guys can look at it. This is on the 15 minute. If you go back, I like to look at things on the 1 minute or the 1 hour, right? And this is a little bit, kind of clears it up a little bit easier for you. So here's what we have as far as like, this is APT, right? So APT, we come out, what do we have? We have the first flag up, right? And that's going to take us to this point right here. Now this point right here is these candles here, which is we're seeing that tip right there. And then that tip right there has a pullback. All right, so there's your run, there's your tip. Let's see, gets to the top. There's my 3 wicks right there. Now these wicks basically would play off of these here. So these wicks would play off of here. And then this wick right here, you have your top wick here. And then you would be coming across in this zone here. Because that's your consolidation. That's where we're looking. What we're looking for is the consolidation move here, right? So when you're seeing these here, these are your consolidation, right? So where is this consolidating? So when you see this top right here, that's kind of where it keeps hitting the same level here, and it's starting to push down. That's what you're seeing there. So consolidation points for this flag could be sitting anywhere in here, and on this pattern, right? But what we have is it's not pointing up, right? It's not pointing up. These candles are coming down, right? They're staying level or coming down. They're not breaking up on an upward pattern, right? And then this right here, this flag right here has 3 in a row that are coming down. And that's where we're seeing when the flag breaks out here, then we know we have a nice little push. Now the difference here is right here, see, okay, so here, see this candle here? Here's your huge candle. We got candles leveling out on the top, right? Here's your huge candle. All right, so when we go here, we have our huge candle. Then we're coming down, pushing up. And we can say right here that we're probably going to be consolidating off of this area right here. This is about the middle zone for this. And then this, we're going to take the top of these wicks and see where we're pushed off here. And that right there would be the flag that we're looking for here. And that's what a 1 hour would kind of give you an ideal. Now what you can do here is compare these pushes, right? So here's your first push, right? Pushed up. This candle is half a candle pushed up, right? As you like to see, you like to see a candle start to break away, right? So here you have a candle up, smaller volume, but still moving up. Look at your volume, still moving up, still moving up. So just right here, this is where you should be entering anyways, but you should be looking at your candles. This is why it's important, you know, more information you have, the better you get. But here's your entry on your 1 hour, right? Then we get our green candle right here, which allows us to get into this entry off of not this candle, but off of this candle. So this would be the entry zone on a normal plateau here, green. So this candle right here would be our entry zone for this APT, right? We'll put it on a little bit higher than this. So green candle here, meaning we're getting in on this candle here. So we'll go to the bottom of that candle right there. Now the first thing we're going to do here is our stop loss would actually go to the bottom of this candle and then the next one. So the stop loss would be here, 1344, okay? To this wick and then the next wick. All right, now let's take a look here. We have our volume, very easy to see. We turn green on this candle, we enter on this candle, and that's where we have our nice little move. That would catch the flagpole that we've seen here where we had our massive push. Now, when this massive push comes up, now we see the big push, it pulls all the way back, the big push, the smaller candle, and now we're starting to see where it's leveling out, where it's starting to hit more of a resistance line. And then it breaks through the resistance line and it's starting to level down, right? So that's where you can see here the difference in the candle patterns, right? And sometimes you just want to study this and go, okay, I had a medium breakout, I had a big breakout, another breakout, and then boom, boom, this is a nice push. And then we had this little consolidation, and then we should be looking for another push here because our volume, if you take a look, when you see this push here, remember, volume has to come down so that it can push up, and there it goes, right? Now you're over here, and you're starting to get the same thing. Volume's coming down, but notice here how volume pushes up, and now we're starting to push up again. We didn't really consolidate, so this looks like it's probably going to come through and end up coming down here because remember the reversing of the volume, right? So here we have our volume growing, it breaks, it goes up, and then all of a sudden on that candle right here, we go even, right? And then by going even, we have another explosion. We come back down, even, and then now we're starting to come back down on our volume. So this looks like right here, we didn't get that break through the flag, right? 1, 2, 3, 4. We like 5 candles. So 1, 2, 3, 4, 5 candles, 6 candle breakout. 1, 2, 3, 4. This is the 5th candle. We need the 6th candle breakout. But it looks like the 6th candle is probably going to end up getting caught here in this wedge and probably pushed down. So that's what we're waiting on right here. And that RSI on the 1 hour, you know, even though it's coming down there, it can bounce. So that's what you want to start looking at is these patterns. But this will let you know when you should be looking into a pattern that's going to break out. So go to a 30-minute. That'll give you a little more bars that you can look at, easier to consolidate or see where the bounce is. So this bounce right here is somewhere on here. See that little, here's the, probably a little bit lower, right off this candle here. So the top of this candle, the bottom of this candle, bounce, bounce, bounce. This is our nice little flag right there. And this is the 30-minute. Now we come over here and we're going to adjust this. We have a touch, and then that is a touch right there and a breakthrough. And that is our flag. So this still looks like a nice little type bullish flag, but it needs to pull down. It has to touch this flag point here, right? Like, see how this flag point here is touching? And just look at your moves. Look at your current moves, right? Look at the difference in this flag pattern, right? Consolidation, right? Touched, came back down. This should be in this zone right there. Touched, and then you see where the volume starts to disappear, but it's still going up. Volume coming down, but still moving up. Volume coming down, still moving up. Volume down, and then all of a sudden consolidate, and then boom, there's an explosion, right? We come out of our little pattern. This right here on the 30-minute, that's the one you want to look at so you can get a very nice bull flag setup. Keep an eye on the 30. When you go here, there's our 3 wicks right there. You always want to have at least 3 wicks touching, right? So this right here would look like more like our flag right there. And this will just give you an idea of like what you're looking at and what you should be considering another possibility of a trade. Does it look like a good trade? Should we watch it? Right now it's consolidating. That means I can come back when it starts to get, starts to come to these lines to see if it's going to be a breakout or a rejection and come back down. So that's kind of what we're looking at right here. We're looking, and these are just simple moves that you can make. As you can see here, we break through, we touch, we're looking good, and then all of a sudden, but you should have already been in that trade down here. But right here, the consolidation that we're looking for, this pattern is completely different. Look at this pattern of consolidation. Solid buying, solid selling. Like this is solid across the board, and then an explosion. Now you come up, you're down. You don't really come up. You kind of shoot up and down. You're losing momentum, and then you stretch one more time and you fail. So now you should just look at that pattern. All right, look at the difference here in these flags, right? Consolidation and explosion. And now we have this reckless looking scenario of a candle, right? Not really consolidating to where it's like steady explosion and boom. This is kind of like last burst, hope it all happens. And look at the bodies on these candles, right? And that's what you want to use the 30-minute as well to kind of like do the review of the 1 hour flag, correct it on the 30, and now you have a nice little picture. So this looks like it should be coming down here and touching, and then we should get a bounce, then a bounce, and then an explosion, right? So that's what we're going to wait for. So we're going to touch, up, down, and then go. Or it's going to come down, break, and then fall, and then we'll be waiting on a short. So that, guys, go in there, take a look at that, study the link that we gave you, read it over and over, and that will help you understand when you're looking at coins how to set and go, okay, when do I need to be back on APT? I know I don't need to be back on APT for 1, 2, 3 candles, which is at least 2 candles, another hour. So I can come back at 7:30, I can come back at 8:30, put that on my list and to come back, circle back. All right, guys, hope this helps you out. Study these flag patterns. I will put a link next to the video here so you can go study these and just Google them. Just the best patterns, man. Flag patterns are the best ones to use. They go up and down. They have all types of little information that you can look at. If you can see here, this looks just like the flag pattern we just looked at. Simple things. APT looks just like this. Breakout. Here's your consolidation. Here's your flag. All right. Breakout. Now, if you guys are looking there, if you took a look at uh, these patterns here, you're going to see these patterns as well. A lot of times these kind of like M patterns or even like hill patterns. And then all of a sudden there's a break point right here, and this will help you out here. You got one rejection, two rejections, and then you see this breakout. That's the flag pattern, right? That's the flagpole of the pattern. And then all of a sudden it drops back, right? That's just why you guys don't have to chase a green candle, because the green candle always falls back. And then once it comes down and it starts consolidating, then you jump on the next move, and that's your move, right? So all these here will give you some solid information, but this pattern right here will basically help you make the most money, and you'll start to really like it. And that way, when you're looking at something, you at least have an idea when you need to come back, or if it's juicy, whether or not you should be setting an alarm for it or whatever. So I hope this helps you out, guys. We're going to get into more videos of this, but you need to learn the flag pattern first. That way you can start looking at it, and this will be the best pattern for you guys to follow.